So you need to know your sales, your gross profit percent, which is the gross profit divided by sales.
Okay.
You need to know what your net profit is and your current cash balance at all times. And if you have those five numbers down in your mind, if they burn in your memory, you'll make better decisions.
And I hope you're having a super, super great day. I know I am. And welcome. Thanks for coming back to our show. So, every time we try and bring you something wonderful, interesting, expand your horizons, grow your business, grow your personal life in any which way. So, today we have Michael Barbarita. I love saying his last name. And he is a business expert. Oh my gosh, he's got an impressive background. He has grown companies from 2.5 million to 8 million, the Ski Town USA. He's an accomplished entrepreneur, a public speaker. He's written a book that he uses for lead gen. So we love that, of course, at Elite Online Publishing. And he is going to talk to us really. That's something I really want to know is converting. How do you convert that person to become a customer? That's the number one thing. And we're going to cover a lot of other stuff. I'm just telling you, roll up your sleeves today, get your notebook out, and we are diving in. Michael, thanks for coming.
Oh, pleasure to be here. Thank you, Melanie. So one of the things that we wrote about in our book is something called that we like to call the conversion formula. When we were doing research for our book, we had to go back all the way to 1931 to find something that we really resonated with. And in 1931, it was stated that it in marketing, you have to get into the mind of the customer. So what we continue to research is, well, how do you go about doing that? And we found that it's really based on two emotional issues. Number one, the problem the customer has it doesn't want, and two,
Mhm.
the solution they want they can't find. And people love to buy, but they buy based on emotion and then back up that emotion logically. And so what we created was something that we call the conversion formula. And the conversion
Okay.
formula is a four-step process that addresses the problem and solution. It does so at the right time, as if you were in the prospect's mind. So, for example, and by the way, the conversion formula has four parts, and they have to be performed in the exact order. Otherwise, the formula doesn't work.
Really?
Uh,
It's like baking a
yeah, and
cake sometimes or certain things, if you put the ingredients in the wrong order, it messes everything up.
it is a lot like that because a lot of people start with the third component. And I'll go through the components, but a lot of people start with the third component, and I'll get to that. So in the conversion formula, it's four steps. The first step is called captivate. Okay. And basically, it's a headline that identifies the problem the customer has and doesn't want. The second step in the formula is what we call fascinate, which is the solution that they want that they can't find. And it's kind of a subheadline. So the headline is the problem, and we interrupt the customer because we're addressing a problem that they have that they
Mhm.
don't want. And then we engage them with the fascinate, which is the solution to the problem that they can't find. And those first two components of our conversion formula is called the position of market dominance. We have a name for it. And the reason why we have a name for it, because if you don't get those first two parts right, the whole formula falls apart. And the key is to identify the real problem that the customer has. Now, the customer might have a problem with the industry, or they might have a problem with business in general.
Yeah.
Um,
So you use
and
like
so,
so as an example, use like publishing a book, right? You may have a problem like you don't have the time or the money or, give us an example of that, I think would be a good one.
yeah. So if you are a ghostwriter and if maybe the problem is, and we didn't, we have a whole process to determine what the problem is. So it just doesn't come off the cuff. But maybe the problem is that people don't have time to write a book. And so if you're a ghostwriter, that would be something that you would say, how would you like to have a book in 30 days,
Mhm.
60 days, or whatever it is that they can deliver a book? And that would be a problem. See, something that wouldn't be a problem, though, and this is where I think a lot of business owners really miss the boat. Let's say you're a painter. And I've talked to many painters in the past, and they say that the problem the customer has is they can't select the right color paint. Well, every painter can help you select the right color paint. So it's got to be a unique problem that the customer hasn't seen before.
Mhm.
And so if you can identify that unique problem, along with the solution, that unique solution, then you've got something. And that's the position of market dominance, the captivate and the fascinate.
Okay.
The third component is educate. Now that we've captivated and fascinated the customer or interrupted and engaged them,
Hmm.
we now have a little bit more time to go into more detail on how we solve that problem.
Okay.
And then finally is the close, which has to be an offer that's so compelling that the customer can't say no. And I will go over those areas. I won't leave the audience hanging because
Thanks.
anybody can say you need a compelling offer. But I'm going to give you 5 components of a compelling offer, and I'm going to do so in a minute. But I want to explain that the conversion formula is set up the way people buy. What do I mean by that?
Yeah.
Well, as I said earlier, people buy based on emotion and then back up that emotion logically.
Hmm.
So the emotional part of the conversion formula is the captivate and fascinate, the problem and the solution. That's the emotional issue. The logical issue is the educate. So if a spouse was to tell their other spouse why they bought something, they would go through the educate, even though it was the captivate and fascinate that got their attention. But they would go through the educate because it's the logical component of the presentation that business made. And so in keeping with not leaving the audience hanging on compelling offers, there are 5 components of a compelling offer, which your offer should include one or more of. Number 1 is what's called scarcity and urgency. There's only 3 left, or this offer ends on Friday.
Hmm.
So that's scarcity, a limited quantity, and urgency, limited time. The second is a risk reversal, where the seller in the transaction takes most or all the risk. Melanie, when I was in the ski business, one of the things that we implemented, the problem the customer had is they really never knew if the ski they were being sold by some hotshot ski salesperson was the right ski for them
Hmm.
until they got it up on the mountain. So we implemented what we call the ski guarantee. Ski the ski 3 times, you don't like it, bring it back for a brand new pair and keep bringing it back until we get it right. Well, this proved to be really terrific. And the thing about it was, and the year we implemented, we sold 8,000 pair of skis, a 25% increase from the previous year, and only 8 came back. And the point is that my managers all thought that we were going to lose a ton of money, that there were going to be tons of skis coming back from the field, that they were going to be so inundated and busy with that it was going to be a disaster. And what in my mindset was that, number 1, my competition wouldn't do it. And 2, the customer just wanted a good ski experience. And the numbers prove that out. But we took all the risk. And that's what a risk reversal is, where you have to eliminate or reduce the customer's perception of risk, making it easier for them to say yes. So that's a risk
It's
reversal.
kind of like a differentiator. In our business, we guarantee you'll be a bestseller. And if not, we rerun the campaign again.
That's awesome. Right. That is an awesome risk reversal. Right. And it just makes it easier for the customer to say yes because it takes
Yeah.
the risk off the table.
What's number 3?
Number 3 is adding more value to your product or service. So when I was in the frozen cookie dough business, one of the things we did to add more value, first of all, you have to really, in order to do what I did, you have to understand what the long-term value of a customer is, and you have to believe in your product.
Hmm.
Okay. Well, we believed in our product. We knew the long-term value of a customer was somewhere between $10,000 and $15,000. And so with the initial order of our cookie dough, the problem the customer had, by the way, is they didn't want to waste valuable oven space baking cookies. So we gave them a convection oven that they could put on their counter with every opening order. So if they placed an opening order with us, they would get a convection oven because we were so confident that they would reorder and reorder that we could take the hit at the beginning of
Yeah.
the process. And so we did, and it worked very well.
That's
And we added more value to our product. It was the convection oven.
And you're almost eliminating a problem, right? I don't have enough time to do that. So we took the time, you took the time element out. Let's make it easy for you. And
Right.
and they felt like they got a price. Sometimes people will buy because they're getting the hat that goes with it more than the stuff or whatever it is the giveaway. Oh, they're giving the tumbler. My mom and I used to buy cosmetics only when they were giving the freebie bag with the little samples in it.
Yeah,
They call it
right.
the
Yeah,
junk
right.
of the month, so we would only buy when they had the junk of the month.
That is so cool. Yeah, that's right. I remember that. And then number 4 is packaging and bundling, because packaging and bundling gives the perception of value. Let me give you an example. When I was in the ski business, everybody, all competitors, every ski shop, and they probably still do today, bundled skis, bindings, and poles in a package. They called that a ski package.
Huh.
What we did in addition to that is we took a parker, a, a bib, a sweater, and a hat and packaged that together. But we did it in a very unique way. We took the most popular skis that were sold and the coloration of those, and we made our packages around that so that the clothing matched the clothing package matched the skis and the boots.
Mm,
Okay, and so the package was more attractive that way.
yeah.
So that's packaging and bundling, and those sold very well. My competition never did it, and they sold very well. And there was always an opportunity to add on a sale when somebody sold a pair of skis, because we had the matching clothing to go all packaged up to go along with it.
And it made it a no-brainer, right? I don't have to
Well,
think about
it
it.
was great. It was really great. Yeah, it was terrific. And then the fifth and final component of a compelling offer, and once again, you could do one or more of these. The more, the merrier. But the fifth component is indifference to the outcome, which means you
Mm,
have to separate yourself from the sale. You have to, what's it called? Disattachment. I don't think that's even a word, but you have to detach yourself from the outcome, from the sale. Because if you don't, the prospect is going to figure out that you're just there to make the sale. You really don't care about them and their problem, and that you're not on the same side of the table.
mm.
Whereas if you detach yourself from the outcome, and it's hard to do, there's a skill associated with it. One of the strategies that I have 5 steps that a prospect has to take, no matter what product they buy from me.
Mhm.
And what do I mean by that? So, and I would say it like this: whether you work with me or someone else, there are 5 vital steps that you must take in order to implement this business strategy. Now, notice I said whether you work with me
Mhm.
or someone else. So that's just
Yep.
one small example of to become indifferent to the outcome.
Mhm.
Okay, so those are scarcity and urgency, risk reversal, adding more value to your product or service, in packaging and bundling, and indifference to the outcome.
So you sound like you're very brilliant. You come up with these things. If I don't have a Michael in my back pocket, how do I decide what these things should be for my business? Decide what my guarantee should be, or the, adding more value. How do I, or the bundling? How do I, because you're like, oh, well, it's obvious to me. You bundle the ski clothes with it, but all the other businesses weren't doing it. It wasn't obvious to them. So how do you figure out to make
Right.
those things obvious to you and decide what they should be for your product?
Well, that's a great question. One of it, I think in business, you need a certain level of creativity.
Mhm.
And you've got to, I start with the ridiculous and work backwards from that.
I love that.
Okay. That's what I start with the ridiculous. Like, what am I definitely not going to do? All right. Unless you hang me or have a gun to my head, what am I not going to do? And then I work backwards from there. Okay. And I usually land on something that's still extraordinary, but not crazy, totally crazy.
Yeah.
Some of these things some of those things I've been told were totally crazy. But, remember one of them was that oven, right? That
Yeah.
convection oven. But you have to know what the long-term value if the long-term value of the customer was less than the cost of the convection oven and the cost of the advertising to get the customer, that ain't going to work.
Right.
So, you have to understand a couple of metrics.
Mhm.
And, we're also fractional CFOs in addition to business strategists. So we make sure that the client knows their numbers and understands their critical metrics so that they can make decisions like this.
Mhm.
Because that's part of the deal here, Melanie. You have to really understand your metrics. And that's why we combine CFO services with strategic business implementation. So in addition to being creative, and going to the ridiculous and working backwards, you have to understand, you have to know your numbers. You have to know the metrics, your critical
That
metrics in your
makes so much
business.
sense because there was a point when we were first starting that we didn't do the cost of all our different products. What is the cost? What is it going to Let's go back. And so that's kind of how we start now when we're creating something. Let's say, what is it going to cost us? So then we can figure out the price that we can offer it and doing that. That's so to marry those two things. So you're not going underwater, but it is okay. There's so many stores that I remember my dad used to sell at Kenny Shoes. If anyone remembers Kenny Shoes.
Oh yeah.
Yeah.
Well, I'm old.
Yeah.
Yeah, I'm old enough.
And, well, they had the loss leader. So this would bring them in. They didn't make any money on this, but it would bring them in the door. And then we'd upsell them this, that, and the other thing too.
Right.
Yeah.
Right. That's a beautiful concept of retail. Yeah.
Yeah. So tell us, we've gone through like a lot of uncertain times over the last 4 years. A lot of businesses have, with COVID and everything else, have gone under. What do we do in uncertain times to position ourselves from a CFO position to help preserve our business when things don't go our way? And, a lot of business, they have cycles, real estate. Sometimes you're selling a lot of houses. Sometimes you're not.
Right.
How do you survive those times?
Step one is to adapt, which means having the ability to change and to react.
Hmm.
Most business owners don't have the ability to change, don't have the ability to adapt, and therefore don't aren't successful as a result in uncertain times.
Yeah.
You know, business is always changing. So, as a matter of fact, that's why my co-author and I keep writing additional additions to our book, because business is always changing, and we're interviewing business owners all the time
Mhm.
so that we can stay current
Yeah.
with our strategies. Otherwise, they start to go, start to fade a little bit if you're not keeping everything current. So we're constantly interviewing business owners uh, to get feedback, to update our book. So the ability to adapt is really important.
Mhm.
Also, the ability to personally goal set. In other words, what is your number one goal? Not your number one business goal, the number one goal for yourselves and your family. See, you need that for your why, because that drives your ability to adapt and to be flexible, to change, because that's one of the most critical components of an entrepreneur, is to be flexible, to change and to adapt.
Mhm.
And if you really understand why you're doing this, because sometimes, there are bad days. There are bad days and you wonder why you're doing this. If those bad days, and you should never quit on a bad day, by the way, but those bad days make you think about quitting.
True.
And if you really know your why and your number one goal, then you won't quit. Okay. You'll have the stamina to continue. And then, of course, you have to have business goals. Once you have your personal goal down, you do need your business goals. And you should understand your profit goal first, then your revenue goal.
Mm.
Because if you want to hire a manager, you need more profit. If you wanted to have more take-home pay, you need more profit. So it's profit that's really important, and then work up the P&L. So it's profit that really should be first and foremost in the minds of the
Yeah.
business
And I
owner.
think a lot of people get lost in the gross revenue, like how much money we brought in. And they're like, oh, we didn't bring in as much money. But then if you look and you increased your net revenue, your net income by 30%, well, you should be jumping up and down. That's a better way to go.
Absolutely. Yes,
And then
absolutely.
that kind of leads me in. What are some of the strategic changes to increase your cash flow and your profitability for a company? What should they be looking for?
Well, number one, you have to understand your numbers. You should have a general understanding of and I nail it down to a vital 5, but you have to have a general understanding of your P&L, balance sheet, and cash flow statement. When I'm in a room of business owners and I ask how many people look at their P&L once a month, less than half the room raises their hand. And when I ask how many people look at their balance sheet once a month, less than 10% raise their hand. And when I ask how many people look at their cash flow statement once a month, I might, maybe, get one person to raise their hand. And, cash flow, that's the lifeblood of a business being totally neglected. And so and by the way, if business owners don't have a good handle on their financial statements, they should go get that help, because it's really important to understand, your numbers. But what I've done is I've broken out what a business owner should always have in their mind from a financial standpoint into 5 numbers that I call their vital 5.
Yeah, let's hear it.
Okay. So the vital 5 is you need to know what your sales are. You need to know what your gross profit is. Most importantly, you need to know what your gross profit percentage is. So on a standard P&L, you have your sales,
Mm-hmm.
then you have something called cost of goods sold, the cost of sales, some people call it.
Mm-hmm.
And those are the costs directly related to the product or service, so the delivery of it and the production of it. For example, if you're in the construction business, let's say you're a contractor, a general contractor. So you have your sales line, which is the contract price, but then you have your cost of goods sold, which is made up of your direct labor. These are the guys in the field that are producing
Mm-hmm.
the remodeling. Then there's subcontractors, the people who do the painting and the plumbing in the remodel job. And then you have materials. So those 3 components make up your cost of goods sold. So your contract price less those costs, those
Mm-hmm.
3 costs, plus any delivery costs, plus any rental costs, because once again, those things are all part of the product, equals your gross profit.
Okay.
Take your gross profit divided by sales. That's your gross profit margin or net gross profit margin. So you need to know your sales, your gross profit percent, which is the gross profit divided by sales.
Okay.
You need to know what your net profit is and your current cash balance at all times. Your current cash balance. And if you have those 5 numbers down in your mind, if they burn in your memory, you'll make better decisions.
What about cash flow? Like, should you be looking every month at like your receivables, what's coming in for the next 30, 60 days, 90 days? So you have some kind of forecasting
Yeah.
also for your company. Cause then you can
Yeah.
kind of,
Cash has hiding places. And so accounts receivable, you named one of them. Accounts receivable is a hiding place. The other hiding place is capital expenditures. When we make capital we're wondering where the money's going. And so, we make these capital expenditures and we put a lot down, or we put, even if we put 10,000 down, that's money that doesn't show up on the P&L.
Mhm.
That shows up on the balance sheet. The hiding places are on the balance sheet.
okay.
So one of them is accounts receivable. One of them is accounts payable. People pay their bills too quickly. Now, if you get a discount for paying early, absolutely.
Uh-huh.
But if you don't, there's no need to pay your bills early. Some business owners are nervous Nellies and they pay their bills early. They just, I want to get this. I want to get rid of this. I want to get rid of this. Because then they like to look at their cash balance and say, okay, all my bills are paid and this is the cash balance. But that's not the way it should work. If you want to preserve your cash and manage your cash flow, you pay your bills when they're due.
Yeah.
Unless you get a discount, unless you get an early pay discount. People also, another place where cash is hiding is prepaid expenses. So for example, if you pay your insurance premiums all at once, or if you pay for a trade show in advance, that's cash that went out the door.
Yeah.
But it's an asset on your balance sheet because you haven't, it's not an expired cost yet until the trade show occurs. Right?
Yep.
It's a deposit, which is an asset until the trade show comes, and then it's no longer a deposit. It turns into an expense. So these other areas where cash has hiding places and where business owners don't understand it, because some business owners, they're doing all this business. Where's the money? Well, it's hiding somewhere on the balance sheet. Too much inventory. That's another hiding place. Okay. If you have too much inventory, you've just paid for, especially paid inventory. You just paid out for that inventory, and the money's not in the bank. It's on your floor somewhere.
Yeah. And you might be paying juice on that, interest on that in the meantime.
That's right.
Yeah.
That's absolutely correct. Also, your principal payments on a loan is not on your P&L. The only part of the loan that's on the P&L is interest expense.
Mm.
So if you have a principal and interest payment of $300, where $200 is principal and $100 is interest, your profit, all that comes off your profit's $100. The other $200 reduces the liability on the balance sheet. Some people have excessive loans, and what happens is the principal buildup, let's say over a period of a year, you paid principal of $20,000 into the loans. Well, that's not going to show up on your P&L. That shows up as a reduction of the liability on the balance sheet,
Ah,
but it's still a cash outlay.
that makes sense.
And so, so that particular company has to make $20,000 or more in the P&L just to cover their principal reduction of debt service.
Ah, so much to understand. That's why they need you, Michael. Great, great information. So I'm going to tell everyone, please, please, please look at those things that he's talking about on your balance sheets, your stuff that your accountant bookkeeper is giving you every month, and that will help make you successful. And, increase that conversion, use that conversion formula that he gave. I suggest you listen to this more than once. So you go back and take notes because he gave out such great information. You don't absorb it all the first time. You can't write it down that fast. So watch it again, maybe 2 or 3 times so you really get it. And Michael, tell them where they can go to find you and to get your book.
Yes, go to nextstepcfo.net, scroll to the bottom, and just click the link and you'll get the book. And furthermore, if you'd like to interview for the next edition of our book, I promise you this, not only would you help us update our book, but you'll also learn business and financial strategies that your competition isn't doing. So if you'd like a book interview, go to nextstepcfo.net/contact. Go to our contact page, which is right there. If you hit nextstepcfo.net/contact, fill out the form, and in the space for a message, just put the word book interview. And I'll be happy to send you a calendar link and you can interview for the next edition of our book.
Terrific. I love it. I'm going to do it. I want to be interviewed for the next edition of your book.
There you go.
Terrific. Well, I hope everybody learned a lot. And, if you're looking to write a book and become a best-selling author, an award-winning author, that's what we do for all of our authors. Reach out to us at eliteonlinepublishing.com. Have a great week, everybody. Bye-bye. Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full-spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.